Oh man, so Bitcoin moved a matter of 12% in 2 hours. Insane manipulation going on in the Bitcoin price. We need to know exactly what is going on, and this was exactly what I predicted in yesterday's video, which is why it's so important you guys hit up the like button, you make sure you subscribe, you're watching these videos through till the very end. We're going to take a look at the Bitcoin price. We're going to find the key levels and predict where we think this could be going in the short term, and more importantly what I'm doing. But also going to touch on some of the macroeconomic elements, because we've got some really important and one positive update which could give you some hopium of when things could start to get better. So as always guys, don't forget to check out BYBIT and BitGet, links in the description to get yourself set up if you want to buy any crypto. Those are the two exchanges I use day to day. Now, let's recap very quickly. We were forming this Adam and Eve pattern. We broke to the downside. Technical target taking us all the way down to 18,300. And on our way to that target, we were virtually there. You could see we were as low as 18,600. Manipulation began. And within this candle and the next candle, you saw a big move all the way up to 20,800. Insane move. That's a 12% swing on a Bitcoin price, which has such a huge market cap. But it just goes to show that there is manipulation going on. And I'm going to prove that right now. Let's take a quick look at what happened here. So if we take a look, I'm going to zoom into the hourly chart. And what I'm going to show you is you can still see there's one big candle here. So this was one really big candle that made up most of that move. Okay, you can see this candle opened up at 18,870 and the high of this candle was 20,000. So this was the candle that pushed you through, straight through. Now let's go even deeper. Let's go even more. Let's take a look at this. Now I'm on the 5-minute chart. I'm just going to adjust the scale so you can see it. Now take a look. Where do you see the big move? All in this same one candle. Really big move, pushing you all the way to the upside. Now let's just, oops, I've got the wrong bit there. There we go. So what do we see here? As you can see, exactly, you start to get these pumps right here. Now take a look at the time you're seeing these pumps. Where are you seeing these pumps? These are on the close of the daily candle. So if I come back out to the hourly, I'm going to show you, you'll be able to see this very clearly. Here, let's take a look at this candle and look at my, as you can see, that is happening exactly at midnight. In other words, what the whales wanted to do is they wanted to close above 20,000 on the daily close. Now, why is this significant? It's significant because it's not just a normal daily close. It's also the end of a month, and it's also the end of the first half and the second quarter of the year. And why is that 20,000 level significant? Well, we know why it's significant. If I head over to this chart and show you on the weekly, what they are trying to do is they're trying to get the close above the December 2017 high, the blue line at 20,000. We know that 20,000 line is important, and so they wanted that official close above. So this was a whole bunch of leveraged whale games. Now remember, a whale doesn't need to move the price that much. This is a very important point. That whole price movement doesn't have to be through whales. As you know, when we were breaking down from that Adam and Eve pattern, a lot of people were expecting lower price points here on Bitcoin suddenly when already it was falling below 20. So people start to pile on short positions. Now those people are in leverage positions, which you guys know I'm super against any leverage or margin positions. Now, those leverage positions, if you move the price against them a couple of percent, if Bitcoin just pumped a couple of percent like it did, the rest just happens through cascading liquidations, okay? And that's exactly what we saw happen. So a whale just needs to be able to move the price 1 or 2%, which triggers the bunch of stop losses, which triggers the next set of stop losses, and it just keeps, it's like a domino effect, cascading all those liquidations as Bitcoin pumped 12%. Now, I'm going to link a quick clip from yesterday's video where I predicted we were going to get this pullback exactly. We're below our EMA ribbon. Don't be surprised to see if we get a little bit of a consolidation here over the next couple of hours. No big deal, right? It could come here, but still, we're still in full control of the bears, and proof of that is if we head on over to the 4-hourly. Don't be surprised if you see a little bit of a cooling off. Don't be surprised if that happens. A little bit of a pump back towards 20k even, but then back down, because the control is with the bears right now. And unfortunately, the macroeconomic landscape is not suggesting much improvement. So as you can see, we got the move exactly as I predicted yesterday. We ran all the way down here to 18,000. I said we could get a calling off, and it was exactly that. It was nothing but a calling off, nothing to get excited about. A lot of people got excited. Oh, we're back above 20,000. We're going to go to the moon. Ignore those moon boys. It's just a calling off back to our EMA ribbon, and the bears continue to be in control. And now we want to go see if the bears test 18,600. Longer term, I'm expecting it to come down here and test the 17,000 19,500 low. Okay, so that's what we're looking out for here. Now, what am I doing in the market? Well, yesterday I bought the dip. I bought some more Bitcoin. I didn't buy any Ethereum yesterday. I just focused on buying some Bitcoin. I dollar cost average in at around, I think it was 18,500-ish. I managed to pick it up here. Here around 18,800-ish. I think I picked up my latest purchase yesterday. Okay, so that is what I managed to do in terms of dollar cost averaging. And somebody else who is doing a little bit of dollar cost averaging is El Salvador. Yep, Nayib Bukele posted that they got ahead and bought another 80 Bitcoin at $19,000 a piece. We know Michael Saylor did some buying as well. Amazing price points for these guys to be buying, and you can see their conviction holds, and they continue to see that this is a great opportunity for you to buy. And I think this line says it all. Thank you for selling cheap. And that's the reality. Whoever is selling right now at 18, 19,000, they're just people who are panicking. They don't know the value of Bitcoin. They have short-term time frame perspective, and therefore they're selling. And these are all the people that are going to regret it. We've seen it with every single bull market and bear market. Those people who sell always regret it and be like, oh, I had Bitcoin at this price and I sold it because I panicked, right? And that's normal. You will own Bitcoin at the price you deserve based on the research and based on your conviction. That's the reality. Keeping things moving, we have some interesting update, which was this: the Bank for International Settlements to allow banks to keep 1% of their reserves in Bitcoin. Now, why is this such a huge deal? And more importantly, this is such a shame that this is coming out during a bear market. This is the type of news that even in the mid of a bull market or in a full blown out bull market, this would move the price huge. But today, it's not. To put this into perspective, the Bank of International Settlements, those are the ones who are responsible for advising banks on what they can hold in their reserves. Remember, banks have to hold reserves. They have to hold a percentage of funds ready, sat there in case of people asking for their money back, right? So this is ruled by the Bank of International Settlements. And long story short, you can read the details on this article, but they've allowed you to hold up to 1% of cryptocurrencies, which would allow them to hold 1% Bitcoin, which is huge. Now, if you don't know why that is so huge, go and watch this video here, because that puts into perspective what Bitcoin needs to achieve in terms of adoption to absolutely skyrocket. Bitcoin is tiny right now compared to the trillions in market cap in other asset classes around the world. And the adoption case for Bitcoin is not that Bitcoin becomes the be-all and end-all of everything around mankind. It's just that people go, hang on a second, I need to take this Bitcoin thing seriously. And if banks take things seriously, if all these ultra net worth individuals start taking things seriously and putting 1% to 5% of their wealth in crypto, you will see the Bitcoin price skyrocket and the whole crypto space will skyrocket with it. That's very, very important to keep an eye out. Okay, another update. We got VanEck, the other financial giant, right? So these are an investment giant. They've gone ahead and applied for another spot Bitcoin ETF with the SEC. They got theirs rejected about 6 months ago. The other day, we've had Grayscale's ETF fund getting rejected as well. Grayscale have since decided to go ahead and sue the SEC. So let's see if VanEck gets any luck with this spot Bitcoin ETF. My view is we're not going to see an ETF anytime soon. I think it's going to take a little bit of while. And I think some people are getting ahead of themselves, thinking this is going to come sooner rather than later. So it's not something I'm getting too excited about just yet. We do want to hold fire on this one. In other contagion news, Genesis faces hundreds of millions in losses. Now, a lot of their losses are coming from exposure to 3 Arrows Capital and also Babel Finance. And this is the contagion spreading, guys. If you haven't watched my video yesterday, go watch that, because I did explain how all of this cascading effect has been proven now on chain, has been proven to all have stemmed from the Terra UST collapse. The Terra UST collapse caused one domino to fall, which caused the other. The contagion of that one caused the other. And this will not stop, guys. All of these guys, crypto is a relatively small places. All of these big players have exposure to each other. And trust me, once the smaller dominoes start falling, guess who falls next? Medium dominoes, then your large dominoes. So if you think anybody is safe, you're already seeing big names out there such as BlockFi in trouble, in sticky positions. And if you think that's the end, no. This is going to test even some of the biggest companies. And only those crypto companies with huge cash on their balance sheets are going to be able to navigate this bear market, particularly if this bear market lasts for quite a while. Because at the moment, a lot of these centralized finance plays are hoping that the bull market ensues and gets them out of this liquidity issue. But it doesn't look like that's going to be the case anytime soon. So very tricky position for those guys. Now, let's get a refresh here on the fear and greed index. We can see here, we're still sitting here at extreme fear at 11. Not as bad as we've had it at 6 and 7. But again, if Bitcoin decides to fall back down towards 17,600, which I'm expecting here, then things could start to turn sour again on the fear and greed index. Now, let's head on over to the daily chart. And I'm going to explain to you again why, even on the daily chart, and I've said this for a while, but it's not progressed just yet. Even on the daily chart, we extremely extended from our EMA ribbon. Remember when we were at this point, I wasn't averse to the inverse head and shoulders pattern playing out, because even if that pattern played out, that would have ran Bitcoin up to 26,000, which would have gave us a little bit of respite. But I don't want anybody to get excited, because the reality is the EMA ribbon will still do something like this. So this is the situation that would have happened with the inverse head and shoulders breakout. But as you can see, we didn't get that. So we've got this. Now, what does this mean? This means that the bears are in such big control that we didn't even manage to go into our EMA ribbon. In the previous little moves to the downside, we've gone into our EMA ribbon, and that's allowed the bears to call off, regather some strength, then they've pushed us down. Call off, gather some strength, then they've pushed us down. This time, the bears have gone, nah, we're not even going to let you kind of call off a little bit and even get to 24, 25. It didn't let us. The bears kept the noose tight, and they're pushing us back down now towards 17,500. So we still are extended. Wouldn't be surprised if we at some point try to get to 24, but even if we get to 24, guys, the bear's still in control. So we've got a lot of work to do. In other words, I'm not going to feel confident that we can start flipping to the upside, as in we don't turn bullish, until we get a daily candle close above 26,500 roughly. I think the exact number would be about 20. Let's just see. We want to be at the top of this EMA ribbon. Let's give you guys a precise number. So if you can see the top of that EMA ribbon there, you're looking closer to 27,000. So 27,000 close above this EMA ribbon, and then you turn bullish. So you can see how far away we are from, taking the strength away from the bears. So a lot of work to do here on Bitcoin, and it's understandable, right? We've been in a downtrend for a long period of time now, and it's not something we're going to fix overnight. Speaking of which, the positive news which I wanted to share with you. Forget rate hikes. These analysts are predicting interest rate cuts next year. And I think this puts things into a little bit of perspective, because I know there's still some moon boys out there that are trying to spread the message that maybe we can get a massive run up this year. And for me, if that happens, that is a complete miracle, because the situation right now is the Fed needs to get control of inflation. Inflation is rampant. We are probably in the midst of a recession right now. If this Q2 GDP figure prints out as negative, that would have been 2 quarters negative in a row, which is an official recession, Q1 and Q2 being negative, and therefore we're in the midst of it and we need to get out of it. So to say, the market's going to turn around, equities are going to start turning green, and Bitcoin long term is going to stay green, I mean, we've got some work to do before then. Now, these analysts are saying at some point next year, we will see interest rates come down, and I think that is probably about right. That's probably the best scenario we're going to get. Now, in this article, you can go ahead and have a read. They're saying by some point at the end of next year, we'll see the rate cuts start to happen. Now, my view on this is quite straightforward. At the moment, we're not seeing inflation come down meaningfully just yet. I think we won't see it come down meaningfully until September, even October time, where we see it drop from 8.6, maybe to 7.65. You see what I mean? It starts drawing back down. And when it draws back down, the Fed needs to keep doing what they were doing to do that. So they're going to need a couple of more months of continuing to do that. I think that could easily take us towards the end of Q1 next year / Q2, and then we'll see inflation start to come down. Now, the question is, what is going to happen? Will the economy be in a deep, deep recession by then? Or will the economy be chugging along, doing okay, and therefore the Fed continues to increase interest rates to finish off the rest of the inflation journey? What is clear from what Jerome Powell is saying is he'll do what it takes to reduce inflation to the base rate of 2%. Okay, so in other words, he doesn't care if you're in recession. If you're in recession and you're struggling, the markets are down, he's going to continue plummeting on with reducing those inflation figures. He wants to bring them down. So that brings me to about earliest Q2 kind of figure. If they did an amazing job, inflation responds, it comes down to interest rates. At maybe Q2 next year, we get some sort of pause in rate hike / maybe the first cut, depending on how steeply inflation fell down. Now, remember, I did explain in one of my videos a couple of days ago what Jerome Powell said. Go watch that video, because he did give us a glimmer of hope that inflation could fall as quickly as it rose. So this is a unique situation. Normally, when inflation rises, it gradually rises over bad behavior, right? As in you start overheating the economy and it rises, and then you bring it down slowly. But because of the pandemic, because of the printing, because of the supply shock, this created something called vertical supply curve. And I explain it all with the diagrams. We draw it all out. We have a look at it. Now we have inelastic supply. It's a vertical supply curve. Now what that means is inflation rose really quickly. But because of that, it could mean we could also fall just as quickly. So that is the hopium we have here for starting to return to the upside. And that is what we need to monitor over the next few months. For me, I'm continuing to buy the big dip. If we fall lower to 17,600, I'll buy a little bit more. If we fall below there and create a new low, I will be buying big chunks on Bitcoin. Not focused on small caps right now, focused on primarily Bitcoin. And if I get some bandwidth, then I will pick up some Ethereum at low prices as well. Hope you guys enjoyed this video. Don't forget to smash up the like button and subscribe. As always, check out BYBIT and BitGet, links in the description if you want to buy any crypto. Stay away from leverage, stay away from margin, stay safe out there, hold your conviction, go and watch this video, and I'll see you in the next one.